Welcome back to the 10 Bagger Show. The stock we are going to look at today is Logitech. This company is very interesting and fits well into the 10 Bagger Show portfolio, but let's not get ahead of ourselves. Be sure to subscribe to the channel in order to be part of the discussion. Logitech was founded in 1981 and became a leading mouse and keyboards maker during the 2000s. Up to this date, Logitech is the leading business in designing, manufacturing and selling computer peripherals. The company was able to grow their business into the professional and private consumption space and is so successful that they can charge a premium for their products. As the pandemic began, people started upgrading their home offices for the given needs. Logitech saw a year-over-year sales growth of 75% in Q2 2020 from peripherals, webcams, audio equipment, and smart home equipment. It is safe to say that this company benefited from the pandemic. Now, however, I think that the market is overestimating the slowdown in sales, and this makes Logitech a bargain. Before we continue with the financials, let's take a look at the competitive analysis. The CEO, Bracken Darrell, mentioned recently in an interview that this great market attracts great competition. This is why Logitech is doubling down on research and development in order to get a great head start. The research and development expenses are up 28.6% on a year-to-year basis and averaging $69 million in the past 3 quarters. This is very important for Logitech in order to maintain a leading position in the exponential fast-growing gaming market. A direct competitor in this market is Corsair Gaming. This company although has a way smaller research and development budget, which averaged out over the past 3 months to around $15 million. Now let's take a look at the financial performance of Logitech in their Q3 report of FY 2022. The 2 important things I want to talk about are sales growth, margin development and forecasts. Let's start off with this chart, which plots sales in relation to the past quarters. In general, sales dropped compared to Q3 2021 by 2%. The thing we are not allowed to miss here is that Q3 2021 was a record quarter for Logitech, where sales increased by 75% compared to records 2 years ago. In the Americas, sales dropped by 4%, whereas in EMEA the sales increased by 1%. In the Asia-Pacific area, sales also decreased by 2%. In the current price of the stock, a way greater decrease is anticipated, but I don't believe that this is going to happen. The next important topic I want to point out are the gross margins, which are down to 40.6%. A gross margin cut was caused due to industry headwinds, specifically the increase in freight costs. What is positive is that we are still in the long-term target range. Now let's take a short look at the fiscal year 2022 outlook. They increased their outlook from sales growth between -5% and 5% to +2% and 5%. This means that they are certain that sales will grow in the fiscal year 2022. I also am very positive that this will be the case. Now for the last piece in the puzzle, we are going to take a look at the DCF valuation to come up with the fair price. The last time we used this website, I only got positive reviews, so I am going to do the same for the DCF calculation with Logitech. I think it is important to understand that we are not trying to get a single number representing future value discounted to now. My goal is to find an area where the price represents reasonable future cash flows. As you can tell, the stock is undervalued in the base scenario by 22% and therefore creates a huge opportunity for capital gains in the 10 Bagger portfolio.